And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report. We got a full crew here today. As always, we got Frank in here for Friday Fun Day, Frank Day, the Tank Day. I'm not sure what we're calling it. We change it about every week, Frank.
It changes a lot. Thanks for having me. Hello, halftime crew. Hope everyone's doing well.
Always great to have you. We've got Mark, we've got Cody, and we've got Matt. Matt, how are you doing on the last trading day of the week here?
So is it, instead of Breakout Frank, is it Frank the Tank?
Frank,
yeah, Frank. We can go back to Frank the Tank because it's not really a breakout market, is it?
No, well, breakdown.
It's not.
A breakdown market.
It did remind me of 15 years ago when Frank the Tank on that movie.
Oh, old school. Yeah.
Frank, I gotta ask you. You've had a lot of shorts that have just based for the longest time for months and months. Did you catch those on the breaks?
Not all of them, no. I wish I caught them all. So I got a couple. I've actually found a couple of maybe swing trades. Maybe we can talk about them a little bit later to the bearish side. Some patterns that are actually recognizable.
Mm-hmm.
But no, I mean, as things were going, things were just moving so fast. I would love to say I caught them all, but unfortunately, that would not be true.
No, even Ray Dalio, who we talked about a few months ago, that was buying put options in front of all of this back in December. If you guys remember the conversation, he came out yesterday and said his hedge fund's down 20%. So you could not have prepared for the last month, Matt, completely. I don't care who you are.
No, because he bought like 0.1% of put options versus his portfolio size. Yeah. And I still remember that CNBC headline. Dalio bets against the market. And it's like, no, he's like, what? He bought it like a
Dalio hedges his portfolio. That's what
that's right. Well, let's have some fun. Let's break the news down here today. There actually is a lot going on here, like every day lately, it feels like, Matt. First off, with the market itself, you've got some pressure here right now. Even as we're speaking in the halftime prep before we go live, the market's starting to break down a little bit on the intraday, giving up gains. What's your read on the technicals on the market? Then we'll get into the news on the market, Matt.
Yeah, just very quickly, just kind of looking at the overnight action here, looking at this on a 30-minute chart. You can do it on an hourly chart as well. As the market was closing down, kind of coming into the close, selling off a little bit yesterday, found a bottom once the futures market and the Asian markets started opening up last night. And then when the European markets opened up right here in this time frame, Frankfurt, Germany kind of opens up about midnight my time, 2 a.m. on the East Coast. An hour later, the Bank of London starts opening up, and the exchanges in London start opening up as well. And he initially saw some quick, tight, nice little market breakout of that 2450 handle. And then as you started coming into the U.S. markets on today, you just saw some negative headlines today that really kind of drove this market. And plus, we do have quad witching day today as well. So we were expecting a little bit of increased, I want to say increased volatility, but can you increase the volatility that we've been seeing?
That is a very good question.
This is just another day at the office at this point. But Tim, late last night, California Governor Newsom ordered a stay-at-home issue, basically meaning that do not leave your house, and the police will, enforce this type of policy. And then what happened this morning is the cash open happened. You started seeing the market recover here as well. But then you saw Governor Cuomo out in New York issue a very, very similar decree for New York as well. And that just threw a little bit of cold water on what was a fairly positive cash open here. And then really what happened is, Tim, you kind of on that cash open, you came right back up into those resistance areas right there about 2450. And at that point, Governor Cuomo comes out and says what he says. And obviously the market's dropping a little bit. I expect this market to kind of stay in the range for the remainder of the day. And the range I say is anywhere between 2450 and really this support level that we found on Wednesday and Thursday of the week, right there at about 2300.
Let's start with the quadruple witching thing. I want to get a couple of perspectives on this. Obviously, a lot of options are expiring. Mark, it's a special market condition that we're in. So Matt's question, can the volatility get higher? I don't think so. But what have you seen in your history watching quadruple witching Fridays and options expiration in general?
My advice to everyone is, we like to make big things out of Christmas, out of Easter, out of these special holidays or special events. Trade as you normally would. I have not ever heard one single analyst or theory or backtesting study that leads me to say that exactly what's going to happen on quadruple or triple witching day. Don't spend you got enough to spend your time on, enough to spend your analysis on right now. trying to put extra emphasis just because it's a special day right now. Whatever it may or may not have, we got events happening in the world that far transcend that. So
Yeah, I don't
Yeah,
think
I honestly could care less. It's quad witching day. And, you know, I was talking to Keith King about it on the coaches show on Tuesday and asked him his experience because he's been around these events. You know, before it was quad, it was triple witching day, right? Before we had market index type and futures indexes and so on and so forth. And he was just telling me, you know, Matt, back in the day, back in the 80s and 90s, when a lot of this was open outcry and, you know, manually done, there was a lot more volatility on these types of days. And now everything is electronic driven, algorithm driven. And, you know, on a day like today, where everybody is focused on everything else, from Bank of America and Goldman Sachs issuing just devastating economic reports to, you know, the corona updates with New York and California doing what they're doing, to the Senate plan. You know, the Republican Senate issued their plan last night, and, you know, people are going through that today, to Mnuchin decrying today that federal taxations are not due on April 15th. They're now due on July 15th. You know, it's just, there's a lot of news in the market, and quadruple witching day is just not something that's on anybody's radar, in my opinion, right now.
Yeah. Matt, do you expect other states to follow New York and California very quickly and swiftly over the weekend?
Heavens, yes. I mean, this entire thing for the last month has been follow the leader. You know, I think it was Frank who said it, you know, nobody wants to be the first, but they also don't want to be the last. And so when you start to see, and we started seeing this with America's federal response, starting to lag kind of what Italy and some of those European states were doing. And we're about 10 days behind some of their outcries. I mean, Germany's going to shut down everything probably later today and have a stay-at-home issue as well. So with California and New York doing what they're doing, I fully expect that to extend to other states. Just remember when we started seeing a couple states shut down school. How quickly did it get to every state shutting down schools? Yep. I mean, we were talking days, not weeks there. And so, yes, I fully expect more states to issue harsher guidelines on social distancing. And I fully expect the U.S. government to enforce social distancing if Americans won't wake up to the risk of not social distancing.
Yeah. Mark, what's going on with coronavirus on the data side? What are you seeing right now? Give us a quick update if you can.
Once again, on the coronavirus, we're having a hard time with models trying to, because testing was so bad at the start, we're still having a hard time understanding the extent of the problem, how far it is spread. Cases in the United States, let me give you accurate figures. Over the last 3 days, they're up. They were on Wednesday morning, they were at 6,100. On Thursday morning, they were at 8,900. And then this morning, officially, they were at 13,500. They're now up to 15,500 cases in the United States. And we're still just getting a grip of how widespread the problem is because of the problem in testing. New York alone has 7,000 cases. So we don't know a lot from how bad the problem is environment. We do know that statements and social distancing, whether you're in Argentina, who just shut down their country, France, Macron said, we're just at the start of the crisis. The UK Prime Minister just said that we are going in one of those Winston Churchill type speeches, says we are going to beat this in the next 12 weeks. But I don't know if we're just weak here in the United States and still clinging on to 15-day and 20-day fantasies. But, you know, we don't have that. People are going to say it's going to be a bit. It's going to be a bit. And so from a virus standpoint, we don't know how far it's spread. But from a messaging standpoint, leaders around the world are starting to prepare people that this could be an extended stay-at-home vacation, you know, to put it lightly. So they're trying to prepare people for that.
Yeah, and that's where financial institutions like Bank of America, even Deutsche Bank the other day, and Goldman Sachs last night, Matt, have come out and give stark warnings about what is actually going to happen with the U.S. economy. And they're trying to pontificate and make projections and all that kind of stuff. I see you've got the banks up here. There's this growing sentiment on Wall Street about, well, maybe it's time to buy, go find some bottom fishing, go find some cheap stocks, all that kind of stuff. What's your read on all of that sentiment, that chatter, and that conversation that's happening out the market right now?
I mean, I certainly feel like you could get a little bit of a nice little rally coming in because there's so much that is overextended. I've been reading a lot and hearing a lot of chatter about how, on weekly charts, especially in some of these industries like the financial sector, the travel, travel companies that deal in the travel industry, how they've been so far overextended in the short term that RSIs on the weekly charts, and that's what you're seeing here, the relative strength indicator, as you see on the bottom indicator here, with this market price just getting blasted over the course of the last month, you've seen an RSI literally go from an all-time high. And this is something that I have never personally seen on a weekly chart with this. I've seen it on a daily chart with individual stocks, but when you're talking on a weekly chart with an entire sector go from an all-time high ping at 95 all the way down to an all-time low in really kind of just 4-week time frame, currently pinging right there at about 12 on the RSI. And so I've been hearing a lot of chatter recently about how, this could be a really, really good buying opportunity. Now, they were talking in the long term. I'm talking in the short term. So, to me, this is not a technical market, right? Everybody I've talked to, from Keith King on Tuesday's Coaches Show, when I asked him, Keith, what are you looking for to really start having confidence in the market? And Keith says, Matt, I'm looking at the Corona situation. I'm looking at the economic situation. What he didn't say is I'm looking at the overextended weekly RSI. But there is some chatter out there that because these things are so far overextended that they could be a little bit of a buying opportunity. My argument against that would be they're overextended for a reason and they're cheap for a reason. And we're only 4 weeks into this situation. And if you read what Goldman Sachs, JP Morgan, Deutsche Bank, Bank of America have stated about the U.S. economic situation in the last 24 hours, it really does give you a lot of concern from an economic perspective. And that's something we've been talking about. I mean, I called this, what, Mark, 2 months ago, it's going to be a recession? Like literally,
we've been way ahead of the curve. We've helped our members.
And now
out
finally, they're finally catching up to it, saying, "Yeah, now we're starting to see the recessionary data." Well, of course we are. But Goldman Sachs warned of a 24% decline in GDP. JP Morgan, Bank of America, Deutsche Bank, all in the 12 to 14, 16% decline in second quarter GDP. And what is really kind of just amazing to me from that projection is Goldman Sachs, even though they're pointing to a 24% correction in GDP in quarter number 2, they still expect the U.S. economy to grow by 1.5% in 2020. And I just don't understand how they get there unless they are expecting just a massive economic recovery in the back half of this year. And what we've seen in all of these projections, these 2-week projections, these 30-day projections, every time the 2 weeks gets done, they issue another projection because they don't know exactly how much time this is going to take. We've seen some projections that it could go anywhere from 2 weeks to 18 months of time frame. And so there's just so much we don't know. But here's what I do know. The unemployment report for next month is going to be devastating. And the initial claim report we just saw the initial claim yesterday go up by 60,000 initial claims to 280,000. Guys, you're going to see in the first time in our history, starting most likely next week, that number is going to be in the millions.
Well, stats coming out along those points from Survey USA that just came in. A staggering 9% of working Americans, or 14 million people, have already been laid off, while 25% of workers have had their hours reduced.
Guys, you're going to see unemployment double in less than a month.
Well, what have we known from? Okay, so analysts make their projections. What has happened every time? They've been too optimistic in every projection.
Every single time.
Whether it was Chinese PMI data, whether it was early Philly data, every time their projections have been wrong because they've been too optimistic. And why would that continue? Not continue. So.
Yeah, which is where this financial aid and the federal aid package right now that is supposedly going to stimulate the economy. Matt, give me the dollar while we talk about this conversation.
We're talking $1 trillion stimulus in a U.S. economy that contract $4 trillion in a quarter.
Yeah,
I'm sorry, the market is not going to see that as enough. It's just not.
Yeah, I mean,
they're not going to see 150 billion bailouts, 50 to the airlines, 60 to Boeing, 90 to other depressed industries. They're not going to see that as enough to solve the economic problem. And, there's going to be opinions one way or the other on that. But I don't think that's going to be the final bill either. I mean, that was just the Senate Republicans' plan. They're obviously going to have to have negotiations with the House Democrats to kind of come with a compromise plan here. But I just don't believe it's going to be near enough for the market to be like, okay, now's the time. It's going to cure the economy. We're talking about over the next 2 months, guys. We're talking about seeing some of the worst economic reports our nation has ever seen.
Mm-hmm. In the bill I did read, and tell me if I'm right or wrong on this, it did say that they were going to do that $1,200 payment and $500 for every kid every month. It wasn't just a 1 or 2 time deal. I mean, are we talking about universal basic income here as we get through this crisis?
Once again, the Senate plan calls for under $75,000 in earned income. Basically, you're going to receive about $1,200 per adult in the household. But again, that's going to be debated heavily against the Democrats, and some of the Republicans also want to go a little bit too far instead of not far enough. And yes, Tim, universal base income. Andrew Yang should have stayed in the race another 2 weeks.
Call the Yang gang.
Call the Yang gang.
Call the Yang gang.
But how long does that happen?
There's
so many unknown situations that 2 weeks from now we're going to be talking about something different. I mean, just think about this, just from last Friday to this Friday, guys. The things we know today that we didn't know just a week ago. And I'm not talking just from a market perspective. I'm talking from an economic perspective. I'm talking from the expansion of the healthcare crisis perspective. We know so much more today than we did last Friday, and I guarantee a week from now we're going to know so much more a week from now. And all of this information that we're gathering from an investor class, from a society perspective, it's going to help us make better decisions down the road about when we do start that buying process again. But to me, I think we're going to see more legs down here.
We got a couple of technicians here on the call with Noah and Frank. Noah, welcome. By the way, always great to have you join us. Matt, is calling that this is not a technical market. I think everybody would agree with this. Here's my question for everybody. If there is something that you'd be looking for, can we get back to a technical market? When can you start prepping trades? When can you start doing some things? Is it when the news cycle starts really crashing the market on a day-by-day basis?
When the market starts buying negative news days, that's when we can start getting into those discussions.
Mm-hmm. Yeah, and I think you can watch for the ATR to shrink too. That's something I'll be keeping an eye out for. When we say it's not a technical market, that is true. And even in cases where that's a little bit of an exaggeration, swing trading has been a disaster-ish nightmare from my point of view, because risk to reward is just completely skewed. You can't be using those, type of stop loss techniques, right? I mean, you have to give, such wide berth. So smaller ATRs will help with that. I'm with Matt. I, do expect, based off of where we are technically and, economically, that the leg down is the likely thing. I think we could actually see some swing trading setups develop relatively soon to the downside. To the upside, I actually, this is the first Friday in the last 3 weeks that I've done my scans. I thought, I could actually prep a swing trade on a few of these things and feel pretty good about it. It's been weeks.
What would you guys need to look at swing trading to the bull side? I think at a minimum, we have to see more than just slowing momentum. I think
100%. Well,
let me give you an argument real quick, a technical argument. Okay, we have slowing momentum, correct?
Yeah.
Oh yeah, we do.
The amazing thing though is, guys, the ATR hasn't contracted. The ranges are still very, very wide in the marketplace. It feels slowing momentum because those candles are contracting, but the ranges are still really, really big. And you see that ATR kind of just level out over here. But you do have a little bit of slowing momentum here. You do have some bullish divergence on your RSIs. You're starting to see a little bit of higher lows here. And from a technical perspective, you'd say, okay, maybe I should go look at some stocks out there that are in neutral conditions, maybe a breakout play to the top side, maybe a retracement if you can find it. But to me, and again, this is just my opinion, I want to get your guys' take on it. I don't think I'm looking to swing trade to the bull side until I see a higher level of support.
100% create a higher high, higher and low.
This
a
is
failed
not
bear retracement.
Yeah, this is not a buy the dip market. It is a sell the rip market.
I'd agree.
You get those bearish retracements when they rip up.
That's worth repeating, Mark. I want to hear you say that one more time.
It is not a buy the dip market. It is a sell the rip market. And those
if you were on Twitter, I would say go put that on Twitter.
Like when those rips happen, I mean, when Delta Airlines, the headlines this morning were Delta up 20%. Yeah, and this gives up back all the gains. McDonald's up, Nordstrom's up, Uber up. These rips that occur as for whatever reason, it's a sell the rip market.
Mm-hmm.
Well, but if you do get let's say we break out of this resistance at 2,700, we come retest 3,000, and then we retrace back down to 2,700. At that point, you'll have further evidence of saying, okay, the sell the rip didn't work because it broke out of those moving averages. It established a higher high. It was retesting those support levels in terms of a retracement. So, I don't think we have to pick the bottom here. We can wait for evidence from a technical perspective to let us know that sell the rip is no longer working, just the same way 3 weeks ago buy the dip was destroyed, right? Mm-hmm. So we're going to see that evidence in the chart. But yeah, from those articles I read, just okay, RSI is overextended. Yeah, it's just consolidating before we see another leg to the downside, in my opinion.
I mean, in fact, a lot of the day trading things I'm doing are moving away from the, and I'll talk about this weekend. I'm going to do a couple mind of it traders, because what else do I got to do? I don't have any kids. I'm not going outside. And isn't that like what we're all facing right now? But if you go to some of these rip markets, I mean, go to a Boeing intraday chart. I really think the sell the rip strategy right now for day trading, at least in my personal, this is my opinion. If you go to an intraday chart, you're going to see these rips occur, and you're going to see things go up, these rips up, and then you get this stabilization pattern at the top, and then you see these huge swings down. I mean, Boeing ripped up, stabilized, started to move down, and if you looked at a 5-minute chart, you'd see it even more clearly. Like these huge stabilizations at the top, and then rip down and go from 107 to 95. Like these rips up and sell downs.
Do you think that's two reasons for that? Number one, on these rips that we see, I mean, Boeing went from 98 to 107 on one of those rips, right? Maybe that gives people who have just got slaughtered a little bit of reprieve to get out, right? Mm-hmm. Just to capitulate in that environment. Or two, it also allows the day traders to come in and sell every one of those rips. So you kind of got that double whammy happening. And, with Boeing, again, I'll just say this, if you loved it at 400, you're going to love it at 98. But it's probably going lower. Boeing did have some news on the overnight, though. Nikki Haley, who is, former United States ambassador to the United Nations, she resigned her position on the board of directors for Boeing, citing her disagreements with Boeing receiving bailout money. And I just want to say good for Nikki Haley. And also, if there was ever a telltale sign that Nikki Haley's running for president in 2024, that was it.
Yeah.
I'll vote for her.
Respect for that, for sure.
Yeah. I mean, nobody's going to want to touch those corporate bailouts right now. You don't want to be on the board that ends up receiving it and then having the public come back. Obviously, a good move for Nikki Haley there and very telling for Boeing. I don't know where the bottom is on Boeing. And those sell the rips, Mark, I'm with you 100%. You're seeing it across the board.
I mean, you saw it on Boeing today. You saw it on Dell today. You're going to see longer rips that occur on a couple-day chart. Mm-hmm. And think about it. So Boeing gets a big leg up for whatever, or some of these companies where people hate right now that just don't want to touch. What do you think Boeing's going to do? Is it just going to keep rip roaring to 150, to 200, to 250? I mean, there's not real sentiment change. Mm-hmm. And so, I mean, that's just the market we're in right now. It is. Right now, so
$60 billion in bailout money does not cure Boeing's problem.
Nope. One is probably not going to be direct money. They might just bridge them a loan or something like that, and who knows if that's even going to be enough. I don't think it will either, Matt. Stocks across the board all pretty much look the same, quite frankly. Dow, S&P, NASDAQ, Russell. Move on to oil if we can. A lot of chatter out of the oil markets overnight and this morning, guys. In fact, Putin came out and basically said this whole situation with MBS and Saudi Arabia feels like blackmail. Now, Matt, that's a big word. Let's get your take first, Matt, and then Mark and Frank and Noah. I want to get everybody's read here on the oil situation. Matt, you first.
A couple major news headlines came out in the oil market that reflect that is concerning to the oil market. Number one, U.S. is going to start imposing production quotas. They haven't done that in 50 years. They issued production quotas back in during World War II as well, but they got away from the policy there in the 1960s. So the U.S. is going to start imposing production quotas. Number two, the U.S., there was a report, I believe it was in the Wall Street Journal, that the U.S. may start putting pressure on Saudi Arabia and Russia to start playing a little bit of ball on oil cuts to try to stabilize the oil market. But then Putin comes out and says what Saudi Arabia has done is like blackmail. And somebody like Vlad the Mad is not going to use that word unless he knows exactly what that word means. And that was just another shot to say, this is not, we're in this for the long haul. And if you want to talk about sell any rip, that starts with oil as well.
Mhm.
Oh yeah, a retest back into 30. Definitely be. I right or wrong, I will be looking for opportunity there to the downside.
Sell the rip on oil.
Well, and oil too. The break too, you never forget, because we're not in that market, but you saw it in oil last week. We talked about it last week, right? The little floor builds, the floor falls out. There's not big, huge, 3-month breakdown candidates out there, but there are mini breakdown candidates out there, as crude has shown us. So watch for little floors to build as well.
No, and what's the opposite of a falling knife? Because you still want to do, when selling rip techniques,
a SpaceX rocket.
Yeah, you don't, because like falling knife, right? We don't buy, we wait for some, you still wait for technical signals. You don't just blindly, oh, Boeing's up today, let me go sell. You still wait for technical setups to occur. Now, if you're a day trader, you could do that on an intraday chart. If you're more of a swing trader, you still want that technical setup to occur, because what's the catchy thing? SpaceX rocket, whatever, because you don't want the opposite to occur, right? Where like you have a Tesla situation that goes from 400 to 900. You want to have a technical signal to confirm that you're selling the rip. You don't do it blindly. Do not do it blindly.
No, you still follow trading rules. So
yeah, risk rules especially. I mean, position sizing, risk rules, stop loss, know where your exit is. There's no doubt about it. Matt, that looks like a
and looking at this from a technical perspective very quickly, I mean, you're looking at one of these rips happening earlier today. We're on a 30-minute chart. Once it broke out of that double top resistance, you had this nice little price appreciation on the overnight action as Putin's come out and thrown a little bit of cold water on everything. You see a little bit of a drop in price. Where does it come into? Right back into that old breakout channel right there at about 24, really kisses off that 24 level, forming that retracement. But, this retracement certainly could be day tradable to the downside. But to me, breakdowns in oil has been the much better pattern to trade. The retracements on intraday charts have been a little bit difficult.
I've noticed the same thing. I think you're right.
Yep. Breakdowns in both the S&P and breakdowns in the oil market has been that short-term trade you've been looking for.
Do you guys read anything into Trump saying he's going to get involved in between MBS and Putin at some point? I mean, he basically said he'll do it when he has to. Today when asked directly about that.
What leverage? What leverage does Trump have over MBS or over Putin right now?
Yeah.
Putin told him to back off. Putin said back off.
Every country is going into isolation nationalist mode. Every single country around the world. We haven't seen anything like this nationalist movement since really kind of, post World War I. It's really astonishing to see how quickly every country. I mean, Mark, what was it just yesterday? India announced that they're not going to be sending out ventilators at all, and they're going to keep them all for themselves.
Ventilators, masks, and the materials used to make them. They said, we apologize, everyone. India needs these, and you're gonna.
So help me figure something out then. What's Trump going to say to Putin to get Putin to play ball? Is he really going to put economic sanctions or tariffs on Russian products in this environment?
I can't imagine.
Are we going to put economic sanctions on Saudi Arabia? I mean, where's the leverage in that? So, I mean, obviously the U.S. should try to do that, should try to bring Putin and MBS to the table. I just have a lot of questions whether or not it's going to be, it's going to work or not.
Yeah, me as well. The dollar's finally having a red candle, although it might be green by the end of the day here, Matt. There were Fed actions overnight, actually. They said that they were going to basically print a bunch more money and actually throw it back into, I think you told me, mortgage-backed security funds or something like this. What in the world is going on at the Fed?
It's so crazy, it might just work.
I just want to ask a question. Well, maybe not a question, more of a statement. That really worked for everybody back in 06, 07, and 08 buying mortgage-backed securities, right? I mean, that's like, think about it. And I get it. The Fed prints their money, which means they don't have any risk and they can go do that. But you're buying mortgage-backed securities in the face of a recession where there's going to be massive layoffs.
Well, who doesn't pay their mortgage?
Well, the only way that's going to work. Hold on. The only way that's going to work is if the U.S. federal government also issues listen, nobody has to pay their mortgage over the next 6 months.
Yeah.
So you're investing in an asset that doesn't cash flow.
Can't kick out renters. You can't kick out tenants, and you don't have to pay your mortgage. And then, yes, you're not going to see any foreclosures, which means mortgage-backed securities might work. But wow, that's very daring. I mean, the Bank of Japan announced they lost 4 trillion yen on their purchasing of index funds. So I get it. Like, everybody's like, hey, Fed, buy index funds, buy index funds. Well, what if the market dumps another 30%?
Mm-hmm. No,
that's not going to be a benefit.
It's a great question. You know, in that bill that they passed, or not passed, but they're talking about overnight and proposing from the Senate, Matt, they actually did say the government can buy equity directly. I wonder if this is the first steps in the Fed buying equity directly and all these kind of things. We've saw the Fed issue a money market fund in the last few days to where they're buying cash directly. Now, mortgage-backed securities, what else? Probably equity next, I would guess. I know the chatter was corporate bonds, but.
Okay, I just want to answer. I just want to ask a question. How is that the answer to this problem? I mean, let's say Chicago pushes all their pension funds to the middle of the table and starts buying stock, and the stock market crashes another 30%. All of a sudden, you don't have a pension fund in Chicago. It goes bankrupt the same way Detroit went bankrupt 10 years ago. Let's say the U.S. federal government starts pushing Social Security into the market index fund in the face of a recession. The market tumbles another 30%. What are we going to do? Slash Social Security for every elderly person in America by 30% as well? And so, like, I get it when the market is booming and you know, the economy is on a really fundamentally strong ground. I understand those types of arguments that the government and pensions put out there to start buying index funds, start buying mortgage-backed securities. Again, I understand that. But when you're talking about doing that in the face of what could be the biggest recession that rivals anything outside of 1929 to 1934, I think that is a massive mistake and putting way too much at risk, in my opinion.
Mm-hmm. Frank, have you ever seen a dollar chart that strong in the short term? I mean, it's been. I'm trying to think of a.
I've seen a couple that ripped pretty hard, but I don't think they've ever been like this. This has been pretty insane. And I mostly follow the dollar. I'm not much of a Forex trader, but that is quite the runner. There is no doubt. Blowing through 100, which is, you know, I know it's, you know, a lot of fundamentals beyond the technicals, but still, you know, that was pretty impressive.
You know,
I
Mark,
gotta say, I had a couple students tell me they really enjoyed some of my Forex reports because the one that I showed how to swing trade into a day trade, this worked out very nicely.
Oh, your Forex reports are fantastic. I watch them. I'm just not a Forex trader.
Cody is so happy. We've spent more time talking on average about the dollar than we have cumulatively in a long time. He's like,
Mark, you're even talking about the dollar.
I know, because it matters, right? It matters. Like, you know, this is like significant. So like, you know, it's dollar. I can't text women during the dollar when we're talking the dollar anymore. I got to pay attention because this stuff matters.
By the way, Bitcoin is back up as well. If
oh
you guys
my goodness!
Beat me over the head on that one again here today. We don't have to, but it is up.
You know, Tim, I hear it's the new digital gold.
If we could teach what a bearish retracement is right
be an example.
What was that you said earlier, Mark, about this is not the buy the dip, this is the sell the rip market, something like that?
I guarantee you go to a 15 or a 5-minute chart, there was a great signal, you know, there. So
that is definitely a bear retracement. There's no doubt about it.
Nice
there's got to be a really good signal underneath
there's gonna be a really good signal. Yeah. So
yeah.
But don't worry.
See, I just make you guys happy for bringing it up. You know, it gives you guys all this joy about going after Bitcoin and going after me. It's my gift to you on the halftime report. There's no doubt about it. Let's talk individual companies here for a few minutes, guys. Walmart, I want to bring this one up. Actually, you know, obviously everybody knows the demand around Walmart. Mark, they've had to close stores because they can't keep product on the shelf anyway. They're hiring Number one, what they say about 150,000 employees. Now, obviously, that is to meet short-term demand. They're also giving a $300 bonus, Matt. And obviously, news like this is going to come out of stores like this. What was your reaction first, Matt, then Mark, and then we'll go around the team? What's your read on Walmart right now?
In their short-term hiring?
Yeah.
I have no opinion of it. It's not going to change the fact you're going to see millions of people out of work.
Will these displaced workers go to short-term jobs like this? I mean, do you think this can alleviate some of the pain?
No,
Sure.
absolutely not.
Yeah.
You can alleviate their pain.
Yeah. Not enough jobs in one company, just at a retail store probably is where our head's at. The $300, Mark, do you think that's going to be worth it for a retail shop worker to go into dealing with the public and the stress and all that kind of stuff? These bonuses, I saw one out of JP Morgan as well at the banks that they're working at. I don't know. I mean, it just doesn't feel like enough to me as well. Mark?
Listen, like, I mean, our economic system has been like fueled so much by discretionary spending. The consumers we know make up this huge, massive part of the GDP, 70%, somewhere in the rough, I see estimates. But it's the consumer spending, it's the luxury of spending. That's not where people's mindsets are right now. You can give them $1,000. That helps on an individual level. And I totally support that in this unique situation. You can help people like not panic. You can help people pay their rent. You can help people. That does nothing to kickstart the economy. If these initial survey results, and once again, they're surveys, I don't know the scientific basis behind them, but if they're even close to true, where 9% of individuals have already been laid off, that's a shock to the system that we haven't seen, and try to like, it's $1 trillion. $1 trillion. You're not going to be able to kickstart consumer behavior. We're looking at a mess right now, is what we're looking at.
Here's another example with this chart, by the way, where it's hard to buy any breakout, even on strength. I mean, who would have been a better target than Walmart this week for potentially buying the breakout, Matt? It did break out there on Wednesday. It's giving it all back, even on all this news here today that they're hiring more workers and all that kind of stuff. Bullish signals are pretty much off the table for me personally. Is there anybody here buying anything right now?
Only on an intraday perspective.
Day trading?
So if you're seeing if you see a breakout like you saw on Walmart, I'm not going to say don't look at it at all personally, but you gotta, because of all of the bearish sentiment, in my opinion, you've got to get that down to an intraday time frame, and be happy with what happens.
Yeah, but nobody's day trading Walmart.
That is, Walmart's not a great day trading example.
Day trading Walmart. Walmart, there is obviously some analysis that Walmart should be in a portfolio from a long-term perspective. Walmart is a safe haven asset class. They sell cheap goods, cheap things that everybody in society needs. And I'm sure Walmart sales have probably skyrocketed over the last couple of weeks as they're trying their best to keep those shelves stocked, as everybody's spending all their money trying to prepare for the zombie apocalypse right now. So I just want to remind you that Walmart went up 22% in 2008 when the end of the world happened last time. So I could understand an investment in Walmart. Obviously, it's going to be a volatile ride, but it is a safe haven asset. But, no, I'm not looking to buy a breakout with a long wick like that. No,
it didn't hold either. It came back and immediately faked itself out. Investment may be dividends there. Obviously, you're going to have demand. Consumers are going to go to Walmart. Mark, you even told me they had to close the store down early. One of the biggest Walmarts here in Utah.
But the one thing, and I've been analyzing Walmart a little bit, because Walmart's seeing a surge in food, right? Seeing a surge in cleaning products, seeing a surge in medicine and all of that. There is an argument against Walmart because, once again, Walmart's PE ratios weren't exactly a value when this all started, but they're also seeing a decline in so many of their other products. Who's buying toys right now? Who's buying, a lot of the different other goods, and the margins on food aren't exactly robust. So you're not dealing with high margin products that are flying off the shelves. Now, is Walmart, can you view it as a staple, best case cash flow play, selling puts, maybe to enter at lower prices? But, and looking at the numbers a little deeper, a bullish thesis on Walmart does have some holes in it. The sustainability, they sell out of their soup. They can't sell anymore because they can't stock 1,000 cans the next day. And their sales in their other product lines are likely to go down dramatically. So like there are some holes in a Walmart thesis in the current environment.
What about
Especially if
Verizon?
China throws a dagger at the U.S.
Sure.
Oh, just all marks. You just forget about it. Like,
And by the way, I loved what you said there, Mark. Every bullish thesis on every stock, every sector, every market has a lot of holes right now.
Yep.
Mm-hmm. Even like a Verizon, Matt, who came out overnight and said, we have huge demand spikes for gaming, for streaming, for all kinds of stuff. Yeah, people are going to be home and all that kind of stuff, but there's holes in all these arguments because we don't know what the economic fallout is, right?
I mean, the hole in the Verizon, because full disclosure, I have a naked put at a lower level on Verizon right now. It is one of the first ones, but here's the hole, right? Here's the hole in the Verizon. All right, so we need our phones. All right, that's a staple. Is almost viewed as a consumer staple right now.
Mhm.
But Verizon isn't the cheapest of the bunch now, is it? And so, like in a severe economic recession, as you're looking to trim cost, you don't necessarily give up your phone, but you might downgrade the quality of the service because
Yeah,
Verizon's.
but good thing we can't go into a T-Mobile store these days. Plus, converting your cell phone plan can be an expensive endeavor.
It can be
as well.
expensive, and once again, so like I'm just playing devil because that's what you do, right?
Yeah.
Even though I personally
Gotta
said
play
I'm
contrarian.
pulling the.
Mhm.
Even though I personally pulled the trigger because I was comfortable at a certain point owning Verizon, because I ain't buying anything outright. It's lower levels, naked put style. But you have to go through the intellectual argument because we don't have earnings. We can't use PE ratios right now. We can't use PEG ratios because we have zero idea what things are going to look. You have to do intellectual thought exercises on, is the company sustainable through this? What are some of the reasons it might not be? And go through this huge intellectual thought exercise in the midst of this, and then come to conclusions at price levels based on is Verizon going to survive this? Yes, we know that.
Mhm.
So that answers that. But that doesn't mean it's necessarily cheap at the current level. And so you have to go through a lot of different things right now because we don't have hard data. Now, for the cautious, you wait.
Mhm.
Like very, very selective in what you do.
Well, and you can't trust currently stated PE ratios, Matt. You've made the point many times. If earnings collapse, then the price actually, even if the price comes down, PE ratio might stay up or where it is right now. We don't know what the E component of the earnings is, Mark. So the PE
Well,
ratio seems silly.
and that's why in a recession, a standard PE ratio is really, really hard to kind of project where they're going to be because PE ratios actually go up in recessions. And you would think, but Matt, price is coming down, it's coming down, it's coming down. But no, the reason price is coming down is because you have a radically reduced earnings potential in those environments as well. So, looking at a PE ratio in this environment, we're not going to know until we see the E component of that. And the E component of that is not that far away. I mean, you take Verizon here. I mean, that E component is on, 4.9. So we're only talking like 3 weeks away from now. So, here in a month from now, we're going to start to see those earnings, and we're going to start to see what these companies are saying about this through a lot of their conference calls. We're starting to see the economic fallout. I mean, every bank is now accepting the fact that there is a recession. We're currently living through it. The GDP contraction projections are astonishing at best. So, it's going to be important to see the E component of the PE ratio, and that's going to start here in just a couple of weeks.
Markets are mixed here on a Friday, trying to coast into the weekend. We still got 2.5 hours in the trading day. Obviously, there's a lot that can happen between now and then. Give me a quick peek at Netflix, if you will. I did read just today that they have to slow down the bandwidth and the download speeds on this. Talk about a sell the rip pattern there, Matt. That bear retracement might even be better than the Bitcoin bear retracement. You could debate it. Netflix has a lot of demand right now, no question, people coming home. But even right up here, you're talking about a high PE ratio stock, high valuation stock in a market that we just don't know where the demand is. There's holes in any of these arguments, don't you think, Matt?
Growth stocks got to grow. I believe Mark said that many, many, many months ago. And Netflix is one of the top growth stocks out there. What you're looking at here from a technical condition is you're looking at the violation of support. Obviously, that happened earlier this month. Netflix was holding up in the face of a lot of the news from a month ago. Once you violated support, obviously you saw a lower low, and now you're tracing back up into those breakout channels. Now that looks like a 20-period moving average cross, which can be considered a death cross on a short-term perspective. And when you have your first retracement coming in after a reversal formation, as you can see the double top right here, the double bottom right there, that could be considered a kiss of death formation as well. So, obviously any swing trade or aggressive trade would have to start with, looking at those intraday charts and finding those intraday support levels. My favorite time frame on this type of scenario is looking at that 30-minute chart. And as you can see, you're seeing that retracement come up and up and up and up. You got a fairly decent little trend line here on Netflix on the intraday chart. If you connect the bottoms here, you can kind of see that, support to support to support to support. You're sitting on that support handle. Look at the old resistance right there at 330. Test support again just yesterday at 330, kissing into that. So to me, if you look at that 330 handle, you're breaking the intraday resistance level. You're violating that trend line. And now on the intraday time frame, you're underneath all those moving averages. Switching back to the daily chart, that's kind of what you want to see when you're looking at a potential trigger to the downside. Again, the problem is going to be where you're going to place that stop loss is the problem. I would, if you're looking to trade Netflix to the downside, I would look at it from an intraday time frame perspective. Kind of plan the trade on an intraday time frame, and then if you get the momentum to the downside, you trigger into the downside. Just trail that stop loss like a day trade.
Frank, on these rip patterns that we're going to be seeing here, if you end up taking a trade, what kind of vehicle do you use? Do you short stock? Do you go long put? Do you do a spread? One of the hard things right now is with where the option pricing is, going straight long put option is going to be very, very expensive.
Yeah, you nail it right on the head. I've personally liked the futures as the vehicle on ES lately. So if we're talking individual stocks, I would want to go short. Everybody now knows what these options look like. We have seen the VIX drop, so there's that. So for whatever that's worth, not to open up that can of worms. I never have really viewed, long options as a great intraday vehicle anyway, personally. Nope. And so in this environment, I'm going to view it even less so. So I would be looking at, from a stock perspective, if I'm trying to play these things, because again, they're intraday. I need to be fast. I don't need to be worried about a bid-ask spread that I'm trying to navigate as I'm trying to make a decision on a 5-minute chart.
Especially on a spread.
Oh yeah. It's just it's not a very friendly environment from that perspective.
Well, here's one of the hard things with spreads. Even let's say that you do get some kind of fill that you like and whatnot. Now you got to get out of the trade if the market starts to move. Illiquidity in the option market has been a problem in the short term. It's where short-term trading's been so difficult. Almost every trader I know has moved to big products like Keith King and those coaches shows the last 2 weeks, Matt. Learning the futures market right now is a very valuable thing. Finding liquidity in the most kind of liquid products.
Well, and what we talked about on in the coaches show on Tuesday night, we talked about how the last year as they started doing micro contracts in the futures market, that really opened up the marketplace to a lot of smaller investors, not just the big investors. And being able to use micro contracts as a way to scale in and scale out of positions as you start building a position is extremely helpful. And so, it's much easier in the futures market than it is in the options market. And I agree with what Coach Frank said. Day trading options, even in a normal condition, is probably, there's better ways to do it, right? Mm-hmm. In an environment that we're seeing volatility explode, probably not the easiest vehicle to buy options in right now.
Yeah. 2 more stocks for me, then we'll get to Frank's, then we'll kind of get final thoughts here. Number 1 is Facebook. I got a public service announcement. Guys, be careful out there. Do your own work, do your own research. Do not trust information and ads on Facebook claiming to cure coronavirus. Facebook came out and said they're going to ban any product ads like that, Matt. And I have seen some really, really scary things, not even just from companies, but from people. Somebody in my Facebook feed said like some kind of berry was supposedly going to cure it, and it actually is very toxic. Have you guys seen any of this on social media so far?
The hemlock cures the coronavirus?
Yeah.
Wow. I've heard vodka cures it, and then 100 Iranians died of alcohol poisoning.
It's a scary time. It's a crazy time. I get it, but get the information, get the facts. I mean, do not just go with what somebody is telling you. Some potions or cures or elixirs. It feels like the 1900 snake oil salesman. Frank, have you seen any on your
Dr.
feed?
Anthony Fauci is in the market every single day. He's giving press conferences every single day. There's absolutely no reason to listen to some random dude on Facebook when the best medical professional over the course of the last 30 years for the Center of Disease Control is literally telling us what is going on a daily basis.
Yeah, I agree. And I've not seen it as much on Twitter as it sounds like maybe you have on Facebook. I don't use Facebook. I mean, I see plenty of hot takes on Twitter. That's another story altogether. Maybe it's tougher to get that message across in a tweet. I don't know. I've not seen as much of it, but I've got plenty of hot takes. Yeah, don't take Twitter or Facebook's word for just about anything.
Talk about a good little bear flag pattern.
That's a good little example there for sure.
Yeah, there's that kissing off Mark's girlfriend the same way it did it last time here, guys. Looking at that 2-day rally coming back up in, looking at the intraday chart here on Facebook. Nice little double top, nice little double bottom, sitting on support right here at about $150, which is also a very, very significant hold number. Looking at that, this for the first time in really a couple of weeks, guys, I felt like, potential 2, 3, 4 day swing trades are a viable option on the short side of the equation, not on the long side, but I am seeing a few patterns like the Facebook of the world kissing off the 90 EMA. And I actually like this one more than I like the Netflix pattern. The Netflix pattern
much more.
Still a little bit more volatile. And the Bitcoin pattern is a far better retracement than the Netflix pattern.
Yeah. And Matt's right that I've seen this now all of a sudden, at least in theory, I can get behind placing my stop loss above yesterday's high, triggering in below today's low, having a risk reward profile that isn't terrible. Right. And while there's a lot more things out there that still don't fit that criteria, Maddie is right. This is the first time I've seen a few bear retracements. I'll give you a couple more before we get out here, but this is the first time I've seen that. I think this could actually be a swing trading opportunity in a few things.
Yeah. Last one for me, then let's get to
Wouldn't do it over the weekend.
Monday. Let's wait till Monday. Yeah. I think we should probably all assume there's some
honestly
sort of
might blow up the trade as well, but
yes. Yeah.
I think you still got to wait.
Agreed.
Yeah. Tesla, last one for me in the news here, guys. Elon Musk, obviously, he was very staunch about keeping his factories open earlier in the week. Then obviously they've got a complete shutdown in California, not even a choice at this point. But then he said, we can convert our factories to building these ventilators or equipment or whatever it is you need from that perspective. Bill de Blasio out of New York, the mayor of New York, said, hey, we will take anything that you can build. Matt, I expect more corporations to step up and convert and start to address the problem in the short term.
Okay, just because Elon said it on Tesla doesn't mean he's doing it. He was literally sending in his workers against California orders to continue mass production on their car manufacturers. So does he have the ability to do it? Absolutely. Should we see it before we praise it? Absolutely as well.
Yeah. I want to see it though. I would love to hear this news. I think it would be a fantastic thing out of Ford and GM.
I do too. If Elon does that, I will be the first to praise him.
Yeah. Will you pull up Darden Restaurants for me? DRI. Just announced that they're closing all restaurants. I think Darden Restaurants is a perfect example of the sell.
They should close their stock. That's not good news.
But I mean, the type of wild swings we're seeing in something like Darden Restaurants, normal conditions, boring. You would never think in a million years of day trading Darden Restaurants. The ATR is just minimal. But when you have the type of volatility, like a company like Darden Restaurants, where you have these huge swings and the stabilization patterns, if you pull down and if you go to a 5-minute chart, whoever has the screen, you're seeing really that floor break that you had earlier this morning, support levels that form over an extended period of time can create some really nice short-term, short burst scalping type day trading opportunities. It's just these sell the rip patterns, and I'll go over a lot of them this weekend. They've just been consistent. These areas where the market hates. Matt, what did you just say? Darden should sell all their stock.
Yeah.
Yeah, I mean, like the rips on these type of companies, like Delta Airlines today, these areas where people are like questioning the viability and the long-term, can they stay open? When these rip rallies occur, and then you have patterns that have nice support levels that give out, they can be very, very, very profitable in the short term. And they don't have, like, one thing that I'm getting feedback from students is that, you know, even with one MES contract, it moves too fast. It moves too fast because, you know, a lot of people are learning to day trade for the first time. And so maybe even stepping down a level further and start identify this basket of stocks, and don't worry, I'll help go and identify some of these companies. It might slow it down for you.
Can I do a public service announcement real quick?
Yeah.
If you're learning how to day trade in the futures market for the first time over the last 3 weeks, you need to practice a heck of a lot. You need to back test
100%.
a heck of a lot.
Yep.
And you absolutely should not go into the live futures market until you are 100% confident in your ability to navigate that market.
And I give that public service announcement all the time, and I know people still are going to.
I get it, but it's a volatile market. It's a volatile market. I mean, talk about Darden, guys. Darden's ATR range is 25% daily right now. It's got a $10 ATR and the stock price is $40. I mean, that's and what restaurants does Darden have?
What? Well, they have Olive Garden and they have a few others.
Olive Garden, Longhorn, Cheddar Scratch Kitchen, Yard House, Bahama Breeze, Eddie V, Season 52, the Capitol Grill, just to name a few.
Yeah. I don't know what their cash flow is, Mark. I don't know what their fundamentals is, but the market obviously does not like it. I can't imagine a price I'd be wanting to touch this one here in the short term. We have no idea when restaurants and functions are going to open back up at all. And so assessing is really, really difficult. Frank, you had a couple stocks you wanted to bring up in terms of technicals.
Yeah,
you were breakout, Frank. We might have to,
Listen,
you might be bear retracement, Frank, today.
Mostly I am, but I wouldn't be break out or break down Frank without bringing up ALB. ALB ticker symbol, and it might be helpful to go to a weekly time frame to get a little perspective on it. But we do see a pretty big break, potentially occurring here, which is always something I'm looking for. You guys know, no surprise on here. Still dancing at support. And like Matt said, is Friday the day I want to set up any new swing trade? You guys know me, even under normal circumstances, the answer is no. But that is a look back at that history. That is a major, major price point, isn't it, on ALB?
Mm-hmm.
Both is from
it's $60 is really, really important. A close underneath that would be confirmation, and you could obviously, based on probability analysis, expect lower prices on that break. That is a major violation of support.
Yeah, so that was my favorite break. A couple interesting sell the rips. Cat has a nice little bear retracement going on.
Like you're reading my mind, Frank.
I know.
I'll tell you what, the dollar strengthening really hurts Cat because they rely heavily on exports. Mm-hmm. And that strong dollar makes, selling Caterpillars a lot harder. So I like the technicals.
Yeah, the technicals are pretty interesting there. Roku's got similar technicals, another little retracement action going on for us over in Roku. I found that one interesting. I tend to like more shallow retracement type of candidates, as you guys know, but there are some ones that have ripped a little bit more, like Olin Corp, OLN. Very similar situation, big pop off of the bottom, but still in a bearish retracement type of a pattern.
Hey, Frankie, can we describe what you mean by that? I mean, you like a little bit more shallow retracement. And if you want to understand the difference between a shallow retracement versus, a standard retracement, I think the argument could be made that, flag-based patterns would be shallow retracements, and a traditional, bearish retracement would have a little bit more upward movement in price. And I also think a key difference is, especially in this type of market, if it holds the 9 EMA, right?
Yeah,
when you're looking at Caterpillar here, you kiss off that 9 EMA, right? You're starting to trigger to the downside here on Caterpillar. When you're looking at Roku here, you're kissing off the 9 EMA with a nice little doji candle here. When you're looking at Netflix, we were looking at Netflix earlier today. you didn't kiss off that 9 EMA. You actually came all the way up into really kind of that 20 and the 50 period moving average. And in a normal market condition, you know, I actually really like deep retracements, you know, that 38, 50%, 61% on the Fibonacci retracement. You know, when you're looking at this retracement here, if you draw your Fibonacci, you kind of see it kind of right there. You come into that 50% retracement, and in a normal market, I mean, Tim, how many, I mean, we've been doing the halftime report now for, you know, a good couple of years now. Like
Almost
it's
2 years, yeah.
It's almost 2 years now.
Mm-hmm.
And, you know, Tim and I would be, obviously we're the people that have been on the halftime report, and we would label this the Goldilocks retracement, right? When you come into that 38 to 50% type retracement. Love those types of, you know, retracements in a normal market condition, because it's those types of retracements that give you the best return for risk profile. But coming back here to say Caterpillar, you know, you look at this, the retracement we've seen in Caterpillar comes into that 23 to 38% range, a little bit more of a shallow retracement, kisses off the 9 EMA. When you're looking at Roku here, you know, from top to trough here, you're looking at a 23% retracement, which would be more in that flag-based shallow retracement level. And, you know, in these types of markets, I honestly think, you know, those 2-3 days coming right back up into decreasing 9 EMAs, I think those are the patterns you're looking for if you're swing trading to the downside.
I think so too. I really, and I like them generally, but in this condition, I would agree with that assessment. You know, when we get the strong or the, you know, the bigger retracements, the problem I have, and the reason I generally like them less, is because we start to see what I would consider signals the other way, not trading signals, but a break above the 9 EMA. If I'm below it and I break above it, I view that as a little bit of strength to the bulls. Now, it doesn't mean it's a buy signal, but it does mean
Especially
it's a bullish
now.
signal. Yeah. And so I'm not calling it a, you know, I'm not going to buy that, but I'm going to say, oh, that's a little bit more of a bullish signal than I would like to see in, you know, in any scenario, and certainly in this case. So I'm with you always, but certainly right now, some nice little retracements into that 9, breaking out of that intraday, you know, trend, whether it's a little bit of a flag or taking out the trend line or a double top, things, you know, potentially can develop. I was excited. I mean, my list is small. That's, you know, most of the things that I have in my list we've talked about here today. But there are some things out there that I do think for the first time maybe present some swing trading opportunities. And while I've, you know, really kind of enjoyed, you know, the intraday action, and that's usually not my style. It's probably because, you know, an ATR on an hourly chart's about the same as an ATR on a daily chart, you know, at the end of, you know, last year.
Swing trading on hourly.
I mean, yeah, and so it doesn't really feel like it's day trading to me, you know, and maybe it's just because, you know, I don't know, maybe it's just because I have no choice. So, because that's what the market's really given us in my mind right now. But it is nice to see maybe some technical bearish retracement patterns and some identifiable patterns, because we don't want to throw out our trade rules, right? We still need to have clean, repeatable entries, clean, you know, stop loss placement that makes sense, risk to reward that makes sense. Just because crazy stuff's going on around us, and I wish it wasn't, doesn't give me the license to throw out my trading plan and just say, well, let's go ham. Let's not do that.
Mm-hmm. No, Frank, what you said is absolutely spot on. You don't throw out your rules; you adjust to fit what's working in the market. And, you know, for weeks now, we've been talking about how we got to lower those time frames down. You know, if your standard if your standard day trade is a 30-minute chart with a trigger on a 15-minute chart. So you look at your trend on a 30-minute chart, you look at your pattern on a 30-minute chart, and you drop it down into a 15-minute chart to really kind of find where you're placing your support, where you're placing your entry and your stop loss. You just lower that time frame down to a 15 and a 5-minute chart or a 15 and a 2-minute chart. I mean, you just got to adjust to fit what's working in the market, and lowering the time frames from a swing trade to a day trade has been what has been working in this market.
Let's finish up just a quick last look at the intraday on the S&P 500. Markets are around.
Or hold on, or like Simone says, we could just go do insider trading like Congress does, and we can get away with it.
So you're saying I should run for Congress then?
Yes. Yes.
That story is infuriating.
Isn't it though?
Oh my goodness.
I had no knowledge. I have other people managing my money. Blah 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 blah. Isn't that the excuse they've been giving?
Oh, it's the biggest nonsense. And if anybody believes it, well, wow.
Yeah.
It's
Yeah.
gone.
I sold millions of dollars worth of stock a couple days before the end of the world happened. Right? Okay.
What are you boys going to be doing over the weekend?
Doing
How do you
reports.
spend- Doing reports. Obviously, we're going to be prepping the stock report. I got the stock report. We're going to do the newsletter, the option report. We always do our meeting on Friday, getting ready for next week. What are you watching from economics, from the coronavirus? Is there anything particular? You're just going to wait for the news and kind of react the way most of us have been doing?
We're going to be data driven. We're going to be data driven on every single day. Later on today, here in about a couple hours, the coaches of tackle trading are going to come together, and we're going to scan those markets to find those nice little flag patterns, breakout potentials as well. And we're going to spend quite a bit of time on ranking this marketplace. And it's always cute. You got to let the little boy talk.
Let the man talk. Yeah.
Say hi to everybody.
Hi.
Say how you
Hey,
doing.
buddy.
How are you
Christmas is
doing?
stuff,
Hey, buddy.
little boy.
Yeah.
Love that.
This is what I'll be doing this weekend, hanging out and playing games.
Can he read a chart, Noah?
Not yet. He knows what a doji is, but that's about it.
Yeah,
But you guys want to hear something funny? Listen to this. Hey, Jonah, what do you call it when people get stuck in a race where they have to work and pay bills and work and pay bills and work and pay bills? What kind of race is it?
Daddy,
What-
put these
Oh,
on
what kind of
your
race is that?
head. Rat race. Rat race.
That's right. The rat race.
That is awesome.
Fantastic.
Rat race.
Yeah, I love it.
Yeah.
Frankie,
Just wait for universal basic income, young man, and we won't have to talk about that rat race anymore.
There you go. There you go.
Frankie, as always, great to have you. Thanks for picking
Yeah.
up some of those stocks. Obviously, learning how to prep them and build them. It's going to be a wait till Monday situation, no matter what, even if you do the preparation, because heading with a swing trade over the weekend is not advised at this point.
Yeah, we've had to readjust any potential entries for almost a month now, so no reason to think that it won't be true on Monday. But we definitely want to have a watch list, and we'll do our part to make sure that all of our team has one. And of course, don't forget to all of our fantastic female traders. We've got the Women in Trading group going on tonight. Fellas, don't even try. Em's not going to let you in, so don't ask. But ladies, you have a fantastic time.
Absolutely. And Mark, how can people access that? Is that link on the events page at Tackle Trading?
It is on the events page, and it is free. It is not a pro product. It is
For everybody.
anybody can attend it. Anyone can attend it. So, and that is this evening. Go to the events page. Once again, I'll put up the events that I'm doing this weekend. One of them will be on just value investing. One of them will be on day trading, and then the commodities report. So I will see a lot of you over the weekend.
Sounds great. All righty, Matt, great job today. Mark, great job. Matt, any final thoughts for the team out there?
UK Prime Minister Boris Johnson just announces lockdown of London, telling cafes, pubs, and restaurants to close.
You're going to see it across
You're
the
going to
board.
see more of it here.
Dominoes are going to fall. There's no doubt about it. All right, we'll see how this.
Oh, and I
Friday.
did see American liquor store companies have announced that they're going to start producing sanitizer.
Really?
Yeah.
Yeah,
Like-
they can use the same distilleries and their equipment to make hand sanitizer instead of alcohol.
One thing that is encouraging in these moments of crisis
is when
is
people come
watch
together to do
corporations come together, do what's right for people. And I'm not ready to say it reminds me of 1941, but it kind of does.
It's
Listen,
nice to see
capitalism
people
works.
getting along and working. I wish it didn't take this to make it happen, but it is nice to see the spirit behind people working together.
Absolutely.
Yeah.
Absolutely.
Absolutely. All right, guys, great job today. We'll be back next week every day live, 12:30 p.m. Eastern. If you are watching our channel for the first time, make sure you subscribe, click the bell, come back and join us each and every day. If you are Team Tackle, give me that hashtag Team Tackle in the chat. We are a community and a team. And if you ever need anything, you need some help with something with your membership, or you need some value that maybe you're looking for, an old video, a blog, something, buzz us an email, team@tackletrading.com. We're there for you. Great job today, guys. We'll be back on Monday. We're out.